Hello every single one of you and welcome in today's video. In today's video I'm going to show you a very important chart. You most likely recognize this chart by its pattern, by its structure, but it's not the chart that you think it actually is. This ain't the Bitcoin chart only. It is Bitcoin mixed with some other data which shows us a little bit how well Bitcoin is performing in comparison to the newly created dollars in existence. So we actually have seen, since Bitcoin went on this massive rally, this last bull market, we actually have seen a huge creation in the money supply. The M2 money supply from the Federal Reserve, look at this, just actually went parabolic. And once this rolled over and came down, the price of Bitcoin also significantly came down. So I do think, guys, the reason why Bitcoin was invented to protect the individual or institution against inflation, against the creation of money, basically, right? But what we are also seeing right now is that the highs of Bitcoin are actually getting lower in terms of if we take inflation into consideration. So what we can see right here, Bitcoin topped at this peak. We know this for a fact that it peaked at 20,000 US dollars, right? This peak was at 60,000 US dollars, even higher, almost 70,000 US dollars. But if you take the amount of newly created money into consideration, the M2 money supply, you can see that this only came up to maybe 30, maximum 35,000 US dollars. So that is kind of crazy. Yeah, maybe a little, maybe maximum 40,000 US dollars, but this ain't going up to 68 or 70,000 US dollars. Also, this correction right here came to the highs of 2017. So 2017, we actually topped at 20k. So the correction during the bull market of 2021 came down to 20,000 US dollars if we take inflation into consideration. The bear market that we have seen most recently in 2022, very interesting, because we have a lot of people like Il Capo on Twitter or a lot of other bearish Twitter accounts. They basically say Bitcoin has to retest sooner or later these highs from 2019 when it reached 14,000 US dollars. And if we look at the regular chart, we haven't retested those levels. Bitcoin came down to 16,000 US dollars, right? But if we have a look and we take inflation and the newly created money into consideration, we actually can see that it did came down and test those highs, test those 2019 highs. So this is actually kind of crazy, guys, because this shows us as well that the previous bull market, the way we've experienced it in terms of price and the terms of price expansion might be a small form of an illusion, because the amount of spending power, the amount of buying power actually didn't went up the same as we looked at the numbers in that previous bull market. So when we look at, for example, if we would have 70,000 US dollar Bitcoin back here in 2017 to 2018, it would be way more valuable than to have that same amount of money or price for Bitcoin at 2021 or 2022. So I actually think, guys, that this chart makes a lot of sense. You can see that, like, we went right here from number 15,000 roughly to 20,000, which is a little bit, that's over a 30% increase in the money supply, right? So that's actually 30% is quite big, because that means if you would have, like, let's say 100,000 US dollars on 2018 in your bank account with the purchasing power at that moment for 100,000 US dollars, in a couple of years time, that 100,000 US dollars would lose 30% of its purchasing power. That is kind of ridiculous, right? Like, it's just a matter of a couple of years, and that was all due to this crisis, and they printed a lot of money during that crisis. Governments are actually well known for these type of actions, but that's also the exact reason why Bitcoin was invented. But I think this chart is very interesting because it shows even more, guys, and I don't want to be the bear right here, I don't want to be the party crasher, but this, like, the momentum on these cycles is definitely slowing down. So it would not make that much sense if we just look at this as regular 4-year cycles, that in this cycle we are really going to see a parabolic phase, something like we have seen in 2017 and 2016 and 2017. I actually would argue, guys, if we look at this, if we just look at these structures of these bull markets, that the bull market in 2017 might be already the peak of the hype that we are going to see in this bubble, right? Of course, here there is more liquidity in terms of price because the price basically went higher. But if you look at this structure, this price action, this is a very significant rally, more significant so than the rally we have seen right here from 3K up to that 68,000 US dollars. Because if you would just look at 3 to 68K, yes, it's a big rally, but if we take the purchasing power into consideration, the rally is less big, is less significant, right? So this is just another way to look at the markets, and I've been talking about this also when we have a look at data from Google, for example. We can see that I can actually show it to you guys. Google Trends. Let's just go there. If we type, for example, like Bitcoin price, because Bitcoin is, if you would Google Bitcoin itself, it might be people Googling it less because they know about Bitcoin. But if we just look at Bitcoin price, this is something everyone Googles, right? If Bitcoin is in this hype, then everyone is Googling the price because you basically just want to know the price. And we can see right here that the top of that was actually in 2017, December, right here. And that we, in the previous bull market, didn't came up in terms of hype as high as 2017. And that doesn't mean, guys, that Bitcoin cannot surpass the previous all-time highs right here. No, I actually think we do gonna surpass the previous all-time highs. We are actually, for this, we are depending on the expenditure from the federal, or actually on the money creation from the Federal Reserve. Because if this thing just continues to go down, I would argue that in the shorter term time frame, we are not going to see an all-time high, right? Definitely not. It's like even stronger. We are not going to see a continuational move to, maybe we're going to see some continuational move to the upside, because if this is the mean reversion, let's say like this is the average, we might be still undervalued, right? So often we shoot up and like below a moving average. But the creation of money, the reason why Bitcoin was invented, has a very important impact on the price of Bitcoin. And what we can see right here is, if we zoom in into the shorter term time frame, that since April 2023, this one is actually going back up. That's also what we want to see, because that creates an incentive among investors, among the world, to go to Bitcoin. Why? Because there's money being created, new money is flowing into the system. So to protect yourself against, for example, losing that 30% purchasing power from 2019 right here till 2021-22, you have to be positioned in risk on assets like Bitcoin, of course. But when this is going down and the newly created money is decreasing, we have a deflationary environment, then you don't want to be in risk assets. It doesn't matter which asset it basically is. There might be some exceptions to the rule, but I cannot think about the right one right now. But most risk-on assets won't do well when this chart is basically shrinking. So I think in order to monitor this bull market and to monitor investors' behavior, investors' incentives, we have to look at the M2 money supply, and we also have to have a look at how Bitcoin looks, considering the money supply too, right? Because if right now the money supply would double, so that means your purchasing power loses like 50%, like right now at this specific moment, and Bitcoin's price would be exactly the same, like around 30,000 US dollars, it means it's actually worth 15,000 US dollars, right? But this is in terms of purchasing power, which is more important than the number of the dollar, right? The number of the dollar is also a comparison against the circulating amount of dollars. That's why Bitcoin is such a nice system, because the circulating supply of Bitcoin cannot be increased. So you always know what kind of percentage you have from the max supply, or from the circulating supply and from the max supply. But with the dollar, you don't know that, right? You could own now like 1% of all of the United States dollars in existence, and in 1 year it can be 0.1%. Losing one magnitude of value. So this actually proves a couple of things. I think are interesting. First thing is that basically Bitcoin is created for this problem, which is positive, I would say. It's also positive that we have broken still below the 2017 bull market high. If that was not the case, then we might be a little bit in bigger trouble. The more bearish part is that we didn't see that much of an increase in terms of buying power, right? Than what we actually believe ourselves in terms of the number. 3k to 70,000 US dollars. So just something to take that in consideration. We have to watch this chart. If this chart starts to go down again, we might have to take a break on our bull market party. But if this thing just continues to go up, then I would say incentive is to risk on assets. Bitcoin will do good, especially because it has a lower market cap than the regular financial markets. Thus, we need less liquidity to make more gains than, for example, S&P 500. So these are the conclusions that I'm drawing from this chart, guys. I think it's very interesting. It's also for the bears out there. If you still think Bitcoin needs to retest those highs from 2019, well, we actually could make the argue right now that we already did that, right? But I think most of them, they didn't took the M2 money supply into consideration. And I also haven't really heard anyone about this, because I just found it out because I'm working on some research papers about Bitcoin, and I want to analyze some different data, and I just actually was analyzing different markets with this data, and then I just thought like, hey, why not have a look at Bitcoin with this data too? And then I found this out. So I just thought this is an interesting thing to share. Guys, let me know what you think in the comment section. Do you think this is interesting? Do you think this is bullish? Do you think this is bearish? Let me know in the comment section down below. And I want to thank you all for watching. If you like this video, make sure to leave a thumbs up. If you want to stay connected with me during this bull market, make sure to subscribe down below. I wish every single one of you a beautiful day today, and I hope to see every single one of you in the next video.